ETFs are great until you see how much they're taxed in Ireland. So some Irish investors, including me, have started looking for alternatives. Not instead of ETFs necessarily, but alongside them. Quick disclaimer, I'm not a financial advisor. When your capital is at risk, do your own research. So what are the alternatives? There are some investment trusts and holding companies that behave similarly to ETFs, but are structured as individual stock. And in Ireland, they're taxed under capital gain tax at 33%. So you only pay when you actually sell, no exit tax, no deemed disposal. Here are three alternatives that a lot of Irish investors use. First is Berkshire Hathaway, Warren Buffett's holding company. It owns large stakes in companies like Coca-Cola, Apple, American Express, and many others. It doesn't pay dividends. All returns come through share price growth, which in Ireland is actually a tax advantage because you have no annual dividend income to declare. And over the past 10 years, it returned 14-15% annually. Second is FNC Investment Trust. It's globally diversified across all major regions, including private equity. And in Ireland, it's taxed at 33% capital gain tax with no deemed disposal. The dividend is paid out annually, so you need to declare that income to revenue each year. The third one is Scottish Mortgage Investment Trust. More growth focused, but more volatile than FNC Investment Trust. And over the long term, it has significantly outperformed global indexes. Again, taxed at individual stock in Ireland, so 33% capital gain tax and no deemed disposal. Small dividends also taxed as income. So are these better than ETFs? Globally, no. ETFs are still the most diversified, lowest cost, and most consistent investment available. But in Ireland, the tax treatment changes the maths because the combination of 38% exit tax plus deemed disposal every 8 years makes ETFs significantly less efficient than they would be anywhere else. And that's why some Irish investors choose to hold a mix. ETFs for diversification and consistency, and other investments like companies and trusts for tax efficiency. Personally, I have some of these in my portfolio together with my ETFs investments, not because I think they will outperform, but because diversification and tax efficiency is something that matters. And in Ireland, taxes should always be part of your investment decisions. If you like this content, give it a like and follow for more.